This is the weekly review for the week of November 21st to November 25th, as well as this week's Sunday preparation. So, coming into this week, I didn't really have a super clear bias because I was anticipating most of the week to be consolidation since we had two holidays this week, Thursday and Friday. So, it was a very short week ending on Wednesday. So, the prior week, I pretty much just marked out all of the liquidity that was near price. Previous week's low, these equal lows, and the equal highs above price, as well as previous week's high above here. And I just wanted to see what price did, which liquidity price took first, and if we formed a setup around it. So starting on Monday, when I first opened the charts, I noted how we had a SMT with London low here. We took the liquidity below London low and had some displacement up here, and then consolidation. And we had these equal highs just above price, and then these equal lows as well as previous day's low down here. So I was seeing which of these price would take first. Now, we did end up taking these equal highs first, and I was looking at a bullish setup initially and into this M5 fair value gap, but we ended up taking the equal highs here before returning down to this fair value gap. So that disqualified that trade based off of the London low raid, and this fair value gap here in discount. And we basically had these triple equal highs. We had another high form here just prior to the 9:30 open. And then I also noted on the M1 that this was a M1 fair value gap here, and we had a not super convincing break in market structure. So, and we also had a failure swing with previous day's high. So I was just watching that. I wasn't really interested in taking a trade there because we didn't have clear displacement down, and that ended up being the right call because we ended up coming back and taking that high and creating a short-term SMT here. I believe this was with US 30 as well. So we had the higher time frame, previous day's high, another short-term SMT here, and then we started breaking market structure down. I noted this M5 for value gap. We didn't break market structure before coming up into it here just a little bit. So there was no entry on this one. And when I started to get interested was with this M15 for value gap. I was really just watching price here. And looking back, I probably should have taken this trade because we had these clear equal lows as the draw on liquidity. This being the institutional order flow entry drill, high time frame failure swing up here, clear displacement down. The only thing that wasn't super clean for me was that the M5 fair value gap was kind of small, but there was a pretty sizable fair value gap on the M15 2-minute and 1-minute chart. And we came up here into premium of this shorter term range and nicely took out the equal lows and previous day's low. So this was a pretty clear, or should have been a pretty clear draw on liquidity for me. And I should have had the confidence to get in on this institutional order flow entry drill. Then after that, moving into the lunch time frame, we had a bullish SMT here again with US 30. We took previous day's low. US 30 had the failure swing, and now we had this displacement up, broke market structure, and here during the lunch session we came back down into this fair value gap in discount here and started trading away from it. So at just after 1 p.m. when I started looking at the charts again, I got interested right here when I saw this move up, and my new drawn liquidity was the high formed in New York session, because again I was anticipating consolidation for this week, and we took sell side here, so the remaining liquidity is above here, buy side, and there was an entry here if you could have marketed in just at 1 p.m. But I didn't feel comfortable taking that. It was only after this displacement, creating another break in market structure here, that I felt confident, because now we're respecting bullish PD arrays and we had this raid here. So I entered in on this institutional order flow entry drill, and this was a multiple time frame inefficiency, so M5 all the way down to M1. There was a fair value gap in here, and I was just targeting 1.3R drawn liquidity being New York high, but we just ended up consolidating, so I cut the trade at break even right here at 4 p.m., which is the end of the PM session. So there was nothing for me on Monday in terms of profits. This institutional order flow entry drill was the cleanest setup in my opinion. So moving on to Tuesday when I opened the charts, I noted how we had this bullish failure swing with SMT of previous day's low. We had a nice displacement up, breaking market structure, came back down into this multiple time frame inefficiency, as well as this H1 order block, right? And obviously right the day before, we had cleaned out these equal lows. So that, in conjunction with this bullish order flow or price action in London session, gave me a bullish bias on the day for Tuesday, because above price I saw a lot of relative equal highs. This one right here, this one right here, and then this one right here being previous day's high or Monday high. So I was pretty confident in terms of the bullish bias on Tuesday. The only question for me was, where would I enter? I was looking at these two institutional order flow entry drills on the M5, right? This M5 candle here. This obviously ended up giving 1.3R. This one did not end up giving 1.3R. Now, the reason I was a little hesitant was we were above previous day's high, and we had a SMT all the way from here, and we're pretty far away from the 12 a.m. opening price. So even though I was bullish and pretty confident on that, I just was not sure where to enter. And in the 9:30 opening here, we ended up having displacement down and retracing back into this M15 dealing range here, from that low to that high, and this M15 fair value gap, which had not been returned to yet. So that's really the main thing that I noted in my journal. And also to note that there was no bearish fair value gap here, right? So that was even more of an indication that this displacement down, despite having a bearish SMT, we shouldn't be looking for shorts coming up this way, right? Because there's nothing even to enter on here. But the question for me was, when I was watching this live, was where to enter. and I started looking for a fair value gap in discount once were starting this bullish displacement away, but price never came back down into discount here. And then I was looking at this fair value gap. I never ended up entering on it, and even if I did, I would have been stopped out because the low of that fair value gap was violated. Um, but it was really in this multiple time frame inefficiency that I was looking to get an entry in, but we never came back down into a discount there. So um, the main thing that I noted in my journal about Tuesday was, even though I was really confident on the bias that it was going to be bullish, um, I just didn't get a clear entry um, because I didn't know where to enter. So Tuesday, and then in the PM session, we didn't form any setups. Price just kind of meandered and inched higher, and it took out pretty much all of the equal high buy side liquidity. So coming into Wednesday, I was looking at the higher time frame on the H1 here, and that was here, yeah. So even though we took out all of this buy side, right? 4 areas of buy side. I noted how in here we didn't really have any significant PD arrays besides previous week high, which was this right here. So coming into the New York session on Wednesday, I said that we should probably still remain bullish because there's no other PD arrays besides previous week's high that could impede price from moving up. So that's why I went into Wednesday's trading with a bullish bias and looking for longs. And right away I noted these equal lows right here. Asian session low and London session low. So pretty much I said, these lows are going to be bait and they're probably going to be rated and we're going to have a setup after taking this liquidity. So pretty much I just noted this on the chart and I was just waiting for price to come down below them. Now we did have a setup form to take price down there. I wasn't paying attention to it because I was at work and my only focus was really when price came down below here, but we had a failure swing with London high. Nice displacement down, retraced up into this fair value gap in premium and gave that 1.3R. This one was a very small trade, only having a 1.7 pip or point stop loss. But this was nice that it took price down to take out these equal lows. So we ended up having an SMT, and then my eyes were drawn back to the chart right here at 9:30 when I saw this big displacement candle up. And that's when I started waiting for a fair value gap to form in discount. Now, nothing ended up forming on the M5 chart. And on this broker's price feed, we had a kind of a gap here. So if we, let's see, where is Wednesday here? So I was waiting for a fair value gap in discount, and I was looking at this range, but we never came back down into discount. Um, what we did get was a range on the M3 chart. Right there. And then we got into this fair value gap here that was in discount, and then ended up trading higher. So that would have given the 1.3R. But I just had the M5 chart open because I was at work, and I didn't notice this M3 setup until after I reviewed the day. So I missed this. Price comes up here, and we have displacement down. Now I'm watching this, and I'm looking at this M5 fair value gap here. That this was the one that I was originally looking to buy in from this range here, from that low to that high, but we never came back down into discount. So I was thinking about kind of marketing in here, but this was right before lunch session. So ICT has that rule that we shouldn't look to enter trades after 11:30 for the AM session, and that rule would have saved me a loss here, or did save me a loss, I should say, because price ended up violating that M5 fair value gap low here, so I would have been stopped out. But nonetheless, we formed a new setup in the PM session where we had a failure swing with the New York session low, took out the short-term sell side, and then had displacement up. And we had equal highs above price, as well as this low resistance liquidity run here, this fair value gap. And all of that combined, I said that a buy in this was very, very clear for me to buy in this multiple time frame inefficiency. And I ended up buying here, and I forgot to set my take profit at 1.3R. So I just set the limit and the stop loss, and then I went back to work, and then I looked back at the charts and I saw price all the way up here. So I ended up closing the trade at 2.6R. So that was just a fluke. That was just lucky for me. But in terms of what else I noted in the journal was that even if you were to see this as bearish, where we could come up into this fair value gap and then trade down, it wouldn't even matter because a 1.3 RTP, you would have been out of the trade, so, so it wouldn't have made a difference if price came up here and reversed because you already have your TP. But everything here was signaling bullish, especially these equal highs above price that they left here. And those got taken. And then we had this institutional order flow entry drill on the M5 chart. I didn't end up taking it because of how wide the stop loss would have been. And price obviously did eventually, after the session ended here at 4 p.m., we ended up drifting higher and it would have hit your TP. The only thing that I did note is that I could have set my TP to take these relative equal highs, and then instead of entering in on the mean threshold, I could have entered in below that, wherever the entry would have given a 1.3R, where the take profit was these equal highs. So yeah, that's the only thing, like, modification that I noted in my journal in terms of how I could have taken this trade. Because when I saw this range setup, I said, "Wow, this is going to be an insanely large range," and it was like 13-point stop loss. And after, this is close to what, 3 p.m. I didn't really feel confident that price was going to move that far. So I just noted this adjustment that I could have done if I wanted to get into this trade. But yeah, that was pretty much the end of the week for me because Thursday and Friday were holidays. I did end up noting that on Thursday we ended up reaching the drawn liquidity previous week's high, and we had a SMT displacement down, RTO to a fair value gap in premium, and we ended up hitting take profit. But this would have been very, very slow because price stopped trading at 1 p.m. and then we resumed trading at somewhere in just like 6 p.m., something like that. So you would have had to hold this forever. And it was just, I mean, even though the setup presented itself, it was not high probability to take this. And especially because the daily range was, what, 12 points. So it's just nice to see that it still worked on a holiday, but yeah, I wasn't interested in taking this. And then Friday, nothing happened essentially. So going into next week, I pretty much just noted all of the liquidity areas again. Previous week's high and previous week's low. And even though we have a bearish SMT here, I don't feel that this is the top and we're just going to continue down from here. What I'm leaning towards is that we can come down into this daily fair value gap and maybe into discount of the daily range before pushing up higher. So the daily range from that daily low to that daily high, and then we have these two daily candles that have a fair value gap in here. Also a fair value gap on the H4 time frame. So that's what I'm leaning towards, is that we're gonna come down in here and then come back up, because this doesn't look like a top for me. There should be much clearer displacement down, and obviously Thursday and Friday were the holidays, so we weren't going to get that. So I think that we can kind of drift lower and build up a bunch of buy side liquidity above these highs here, and after we return into discount into this fair value gap, we could end up trading higher. So my objective is going to be previous week's high for next week, and I don't think that previous week's low should be violated. And in terms of the dollar index, I think that it wants to take this August low from back here. I'm not too sure how it's going to get there, because originally I was looking for price to come back up into this fair value gap in premium from that dealing range high to that dealing range low, but we never quite got up into premium, and we had a raid of previous week's high here last week inside this daily fair value gap and started trading down. So I don't know if we're going to just end up respecting this fair value gap and then trading down to take out that August low, or we're going to end up coming back up into premium here and then taking that August low. But if we just end up running up higher here, that'll give us the same confluence with S&P running lower here into discount and then shooting higher to take previous week's high, where this runs up higher and then shoots lower to take previous week's low. So that's the bias that I'm looking at for this week. And then in terms of the news, we have another pretty short week this week because Friday is non-farm payroll. So we don't trade on Friday. So at best, we'll have Monday through Thursday. But sometimes Thursday, the day before non-farm payroll, could give some pretty crappy price action. So it might even be a super limited week like this past week, Monday through Wednesday only giving good setups. But we do have a decent bit of news with high impact news on Tuesday, high impact news on Wednesday, and even some high impact news on Thursday if Thursday gives us a setup. So that's what I'm thinking for this week, and we'll see what ends up happening.